Quess Corp, and it dropped nearly 10% in trade after the fourth quarter numbers. Let's get in Puneet with more details on what led to this fall when it comes to Quess Corp.
Well, thank you for that. So definitely it's been a disappointing set of numbers for Quess Corp. While the margins have just remained between 1.8 to 2% for EBITDA specifically, we've had a 150 crore impact, which is a one-time exceptional item that's negatively impacting the company's profits. Now, they have mentioned specifically that 120 crores of that is a trade receivable. Essentially, they've given the service to the client but not received the payment, and that has been given as an exceptional item impact in this particular time frame. The other key aspect is that the three-way demerger also cites certain kind of execution risks in this particular time frame. Now, we also had the company's conference call actually scheduled today. They did mention that the weakness actually led by ramp down in one of the NBFC accounts, but 38,000 people, essentially that's the head count, and that while a client specific, they try to highlight it as a structure, that it's not a structural issue but a client specific issue. But the key aspect, and one more thing to note, is that the RBI has come out with regulations for the NBFCs and has mentioned to insource some of the key functions of collections as well, and that will impact further business for the company. The other key aspect is 65% of the company's revenues comes from the IT vertical, and headcounts additions over the last 4 quarters have been very minimal, at least for the top 5 names, and we've spoken to many in this particular quarterly results, and a similar notion has been echoed by almost all players. So that's one of the key aspects. They've also, one final thing I wanted to highlight is they've said that the NBFC account will have a 7% impact in terms of revenue and a 4% impact on margins overall for the next year. So that's another key negative. So overall, a multitude of factors that are not working for the company. Essentially, the hiring in banking as well as IT will be one of the key things to watch out for, as well as the three-way demerger and the smoothness with which they can increase the general staffing, which is the higher margin business for the company. These 3 things will be something to watch out for going forward.
Right, thank you, Puneet, for that. Sneha, coming to you on Quess Corp, what would be the next trigger as per you? Would it be the pickup in business or would it be the demerger?
Okay, what we believe is that the pickup in the business will actually help the company. So companies sounded a little confident that the other sectors will help it to offset the impact of this ramp down. And though there's a near-term impact because of this, but then the company remains fully committed from the long-term point of view. So the full year guidance which they have given is pretty optimistic, and moreover, it's focus on the GCC segment, and the high margin niche businesses will also help it to actually ramp up. So the high margin segment is expected to grow anywhere between 20 to 40%, which will more than offset the ramp down impact. And if you look at on the positive side, the margins cross the 9% mark on a sustainable basis. So even that is another angle which we are finding it positive. So near term, the stock might remain under pressure, but there's a lot of potential from the long term point of view.
Right.